Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. Let's update our view on the gold market. Here the situation has changed not as significantly as in the euro currency, for example, because if euro currency has broken through the intraday resistance level, on the gold market it's a bit more difficult because market has not just single confluence level, but it has the big cluster of the different levels in a tight range, actually in a range between the 1912 approximately to the 1930. So here is multiple levels stand. So take a look at the intraday charts, you will get the 618 level from this reaction point, and 30% from that level, then 30% from this level, and so on. And that creates the big amount of the levels right in the tight range, and the market has to pass through all of them to then make some maybe acceleration to the upside action. But meantime, although the overall action stands really slow and market stumble around this level, it's trying to pass through it, and we do not see yet the signs of the capitulation, that the bulls have capitulated and bears is ready to take the control over the market. It's not happened yet. So market is trying to pass through all it, and we just intend to follow our trading plan that we have specified in the weekend. So what's particular we are watching? On the daily chart, trend has turned bullish. That's great. If you remember, we said that this will be the major important range for gold market, because it will pass through this level, especially with the acceleration above the trend line somewhere closer to the 12 even. In this case, we could get the further upward reaction. So that will be the direct upward continuation of the longer term trend. Meantime, if market will show just a pullback right from here and start dropping, it will tell us that we are still watching for our deeper targets of the retracement as on the daily chart as on the weekly. If you remember, on the daily, our major level that we're watching for is 18 even approximately, because here stands the OP of this major A, B, C time pattern, and this action we trade currently is just retracement. So on the 4-hour time frame chart, here's what I'm talking about. First of all, right now market still stands around the same confidence level that already has been tested, 1912, 1917, and as I said, for example, imagine that you are building different levels. From this top it will be slightly higher, 618. From this one it also will be slightly higher, and that will create the real number of the different levels right around this area. Still, as you can see, market is trying to pass through it. Already stands at a nominal barrier. So if we will plot the barrier based on the precise lows, so you can see market stands slightly above it, but mostly, of course, it hasn't broken yet, because it's like the range, not just particular levels. So it's trying and struggling with this resistance by far. But as deeper market will start moving inside of the triangle, that will be much better for the bulls, especially if it will finally break this confidence level. So it'll be easier for the market to proceed higher once it will happen. On the hourly chart, we're dealing with the same pattern that we discussed on Sunday. So mostly we call it as the head and shoulders, but it's not, of course, very good head and shoulders example, because you could not see real well seen shoulders. It's not really easily recognizable. So it's mostly some hints of the possible shoulders, right? But anyway, the first part of the stuff that we discussed has worked nice. Indeed, on Monday, market has shown this drop, almost has reached the level that we have specified, 1883. But if you will take the parallel view, this also was spiked down, so this was not some price action. And here is as well. So, but mostly it stands at the same area where it should be. So that's why it's so-called right shoulder stands in place. And we said if market will follow it, then this could be A, B, C pattern right up to the 1955 area. That's our short-term setup for the bulls. Correspondingly, if you have taken the position according to this trading plan, you could move stops to the break-even and see what will happen. If not, Well, for you it will be a bit more difficult to do this, because in this case you will have to place stop somewhere below these lows, and it's too far probably. That's why it's difficult to recommend something. Maybe you could try to use the stop buy order on the breakout of this area. If market starts breaking it up somewhere around 1920, you could try to take a long position as well, but it also will be risky because you will have to decide where you place your stop loss order. For the bears, it's relatively easy task, because you need to wait either the breakdown of this support, so if market will return it back down and break it to the downside, that will be an obvious hint that market is going lower, and we will not see any upward continuation. So hand shoulders, this pattern will fail, and this will be a hint on the possible downward continuation. I suggest that if this really will happen, the downward action will be fast, something of that sort. Maybe not as fast as here, but it will be with some acceleration. Conversely, if pattern will be completed, that's the level where you also consider taking the short position around 1955. This will be agreement resistance, and at the first touch it's relatively safe trying to take the short position at this level. So that's our view on the gold market. Meantime, while this pattern is still working, we're following this pattern and see what will happen.